Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is January 15th, 2019, and with all the volatility going on in natural gas, I thought I would address that market today just because there's a lot of potential, but a lot of volatility associated with natural gas. The ETF right now is KOLD ETF inverse. We've got the trends are a little bit mixed up here with the short and intermediate point of the downside, and the long-term trend is fickle just because of the volatility we've had as of late. The technical rating is to the downside, the seasonal accuracy is to the downside, and we just had a pivot high that occurred here today, and we'll look at some support levels as well. When we take a look at some of the other pro alerts here with natural gas, just recently we had some lows that triggered for the pop to the upside, and so based upon overbought now and some low reversals from a couple of days ago, there's a lot that's happening with this particular market. So the easiest thing to do is just take a look at natural gas just to get a feel for it. These are daily bars, and you can see this big gap to the upside and a little bit of a reversal here with today's action, to the up and to the downside. So a few days ago with those lows, those pro alerts, it was looking for the market to start to head higher. But with that pop, that big pop to the upside here, we also have a lot of the indicators, traditional overbought, oversold type indicators are overbought right now, and they're starting to reverse a little bit. Just going back just a few short days ago, we had a wave low that triggered. So there's a lot of ambiguity. Is the market headed higher? Is it headed lower? But because of the volatility, it is making things a little bit more difficult. And so in following the systems, you really have to pay close attention to these particular markets. So let's get a feel for some of the things that are taking place here with the energy sector as a whole. You can see we're doing very well with crude oil, where we are short crude oil with just one position right now, but there's a little bit of hedging that's going on. So it's got a little over a $30,000 open position profit. We're long just a little bit with heating oil. We're up not even $1,000. Natural gas here is short with a nice open position profit of a little over $6,000, but this short just with the one position is a little misleading. So if we take a look at natural gas, when we look at our detailed report, you can see that we have two short positions that just triggered here today, earlier in the day, and then we have an existing long position that's been out there since early January. So we've been able to make money to the upside, and now with the two positions that have triggered here now to the downside, the two short positions, net we are short one position, but the profitability is coming from the fact that we had a really nice long position that is now hedged, and then we have a second position that actually makes us short the market. So that's kind of what's taking place there with natural gas. Now the other thing I want to point out is that the seasonal tendencies, and this is kind of cool with natural gas, you can see from this little black triangle here that that's where we are now. It's actually from yesterday, last evening. And you can see that on the 10-year chart, this is the seasonal tendencies. You can see volatility. I mean, there's nothing but volatility in natural gas. But once we get past this volatility and get into the latter part of January, we'll see a nice trend to the downside. But until then, expect more volatility. You can see the volatility on the 10-year chart, which is taking obviously 10 years of past data. If we look at the 5-year chart, only looking at 5 years of data, so it's not as much data, but you can see the extreme volatility, the up then to the potential down that we're experiencing now. We'll update this chart this evening, and then we'll start to see it a little bit further down into this little sell-off. But what you should expect is just more continued volatility, but with great opportunities. But that opportunity is going to be interpreted with a little bit of risk. So here's a dollar risk breakdown. We look at all the different markets. And what we're looking at is the volatility from the long side and the short side as to what traditionally happens. Kind of, it's not ATR risk for those that get into that. This is more traditional risk as far as a dollar amount risk. And what we're looking at, and the reason I'm pointing this out, you can see natural gas right through here. We have long risk and we have short risk. You can see the long and the short risk are at the upper scale. If you look at both of them, it is the most volatile market that is out there. And so natural gas is really not for the faint of heart. A lot of money can be made and it can be lost very quickly. If we just simply come back here, you can see this gap opening. Those are fast markets and something you really have to be concerned about. So expect more volatility. Watch the systems very carefully. The fact that we have a little bit of a hedge going on right now, we'll see what the market really wants to do. From a seasonal perspective, expect more volatility through January into the latter part of January, and then we should see a nice little sell-off, a nice little seasonal trend to the downside, and perhaps the natural gas will be a little bit easier to trade from that perspective. If it is going to sell off and come right back down, it's going to be playing with its 200-day moving average, but the support level right through here at 2.900, that is the support level. So if this volatility starts to pick up and we start to come down to that level, that will be our first major target, and that will then kind of taper into this other support level right through there. So we have two that we have to look at. I'm just calling it the 200-day for one of them since that's an easy one to follow, and then this 2.900 support level. This obviously for the February contract. So with that, watch over natural gas, watch the seasonals, and specifically watch the systems, because there's, as I mentioned, a lot of opportunity, but also a lot of risk. Just so I can show it, you come to performance, dollar risk, and you can get a breakdown for all the markets and for the individual market. This is obviously all the markets because I want to show a comparison to all the markets, but at least it'll show you where you can find that information on the website. So with that, we will look at some more markets soon enough and go from there. Bye-bye.